All right, guys. Tax discussion continues this morning. Jim, a lot of people were asking yesterday what the market was doing, selling off on news that was not only on Biden's website for most of last summer, but also written about by Goldman 6 months ago.
Yeah, I was reading the Costin piece. He's very clairvoyant. This is an October piece. People have to realize that he puts out this newsletter that is widely read on Wall Street. And I take my cue from it. He's done such fantastic work. It's a blip. You want to buy the blip. As I said last night on Mad Money, this does not affect the companies. And I'm not Warren Buffett, never will be. You can't pretend. But the companies, David, are what we need to worry about. And companies are not impacted by a raising in capital gains for 0.3% of the people.
No, they're not. No, they're not. I mean, they're more focused on the possibility of raising the corporate tax to 28%,
exactly.
which is part of paying for the infrastructure plan that has been put forward. But when it comes to capital gains, that's not the issue. The issue becomes, does it in some way put the brakes on people's willingness to invest overall, Jim?
Well, look, I mean, what are they going to do with it? It is, I'm not going to say it's devastating, because it's never been this high if they get his way. But I just think that we have to say this isn't going to pass.
Yeah, it's funny. I mean, we've got to remember that this is about the House Ways and Means Committee. I think Richard Neal runs it, and that's where a lot of this debate is going to take place. There's not an expectation you're going to get much, if any, support on the Republican side, but that's not really where the fight's going to be. It's going to be more amongst the more progressive Democrats and the more moderate Democrats. I mean, hearing Josh Gottheimer this morning on Squawk Box, for example, somebody who's in favor of repealing the cap on the salt deduction, for example. So there's going to be a lot of different viewpoints on this from the Democratic side, which will get all mixed in, and we'll see if we end up with anything that moves substantially higher, or whether there are some offsets as well in terms of at least some of the high tax states looking for a repeal of that salt tax.
Right. And Carl, having met the president a couple of times, he's not someone who pays close attention to the stock market. He also is someone who is really, candidly, he tells you, never really made a lot of money. Now, as president, it doesn't matter whether he's made money in the stock market or not. But the affinity for the stock market does matter. And the previous president, he had more than just an affinity, Carl. He graded himself. That is not going to happen here. It's funny because you'd be getting an A. But I just think that what matters here is that our viewers are talking about socking the rich. And what I think is incredible, and this is something I learned when I was with Larry Kudlow, is this is most felt by people who think they're going to be millionaires. Those are the people who hate this. And there was an excellent article in the Wall Street Journal today about a couple of guys playing on Robinhood who got wiped out. But they think they're potential millionaires. Everybody on Wall Street bets is a potential millionaire. And this is true hardship for them, Carl, because they are aspirational. And that's who I'm focused on. Those are the people who are furious about this, not the people, the 0.3, who just accept the fact that, you know what, there's more tax. So that's who I'm focused on, the people who want to be millionaires.
Yeah. Jim's referring to the percentage of Americans who do have adjusted gross income of $1 million plus and capital gains or losses. As of 2018, that number was 0.3 of 1%, works out to fewer than about 500,000 Americans, at least, or 500,000 tax filings, certainly, Jim. It does bring to mind two things. One is that Goldman, for everything you just said, agrees that we're going to end up with a number somewhere maybe in the high 20s, low 30s. But more broadly, Jim, we got peak economic growth, peak positioning, fears about taxes, obvious concerns about inflation, and the Bank of Canada is now officially the first to taper. So is sell in May going to be for real this time?
I do think that there will be, if you read the Kimberly-Clark release today, there is not a line that isn't just about inflation. I mean, and it just doesn't seem as temporary as the Fed chief wants it to be. In the meantime, there are we sat with all the airlines, right? The airline companies are saying things are better. And David, I know this is going to sound a little contrary to what the stock market's doing this morning, but I think American Express, the cadence there shows you, look out. Spending is coming back and coming back big. So I don't know whether you need additional stimulus right now. I think that you need stimulus for the people who are unemployed, but not for everybody.
Right.
Shepard Smith here. Thanks for watching CNBC on YouTube.